Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Monday, 2nd of October. We are starting the week and starting the month of October. Hopefully, we are going to have a little bit better performance than on September on the Nasdaq, on the S&Ps, and on other stocks. So we can at least start thinking positive towards the end of the year. But basically today it's a really weird day, a really let's see, FOMO and manipulated day, because we got a lot of manufacturing data today. We got the S&P global manufacturing PMI final. From 47 we got 49, so better manufacturing than expected. We were expecting 48.9, almost a point higher than expected. For the ISM manufacturing employment, and also manufacturing new orders and prices, look at the prices, really pushing lower. Instead of the 48, the previous one, we were expecting more or less the same. We got a nice drop in manufacturing prices, and at the same time quite a huge big increase, 49 on the manufacturing PMI, and unemployment also going higher. So I think this is quite good, decent manufacturing data. That means that the economy is showing signs of strength, but I don't think markets are liking this, because we are having quite a lot of selling pressure at critical levels. Some buying for sure, because good news on the economy is good news for the long term and to avoid recession. But I think there's still quite a lot of fear in terms of higher inflation, higher interest rates for longer. So higher manufacturing means still higher prices. But I mean, there's still uncertainty in the path moving forward. And as you can see, we have a lot of Fed talks today. We have 5 Fed talks today, including Chair Jerome Powell. So be really careful, be aware of that, because volatility might be quite high today. Start the week and start the month. Don't ruin your month trying to push higher when the markets are not trending or are not showing their cuts. I think today it's a day to really be patient and see what we can gather, basically. Let's go to the charts to see the Nasdaq right now, today, starting the week. Doji candle. Well, if you check my weekly recap on Saturday, I'm saying that basically we are holding this level. We are finding some buyers, but still 2 days of big uncertainty, Friday and today. Don't rush, don't try to push the markets, just let it settle and try to decide if it's trying to squeeze higher, or basically we are just trying to find some kind of bull trap towards this huge gap. It's not a gap, but there's no structure below 14,630 and below last week low, the blue dot line. So there's potential to the downside, and of course we can squeeze, but these two candles for me just mean be patient, be really careful. If we go to the 30-minute chart, look at this bearish engulfing candle. First, the context. This was Friday move, Thursday and Wednesday. So I have this trend in which we today bounce off. But look at this. We are rejecting quite heavily with a very engulfing candle, a huge move that we got on the Nasdaq. Nasdaq is outperforming the S&Ps, and the dollar is pushing higher. We are going to see that, but critical level and critical rejection. Sometimes it's not what happens, but what doesn't happen. And right now, what didn't happen is basically we tried to push heavily and we got instantly rejected with the same power. On the 1-minute chart, this was a nasty rejection. Remember, pre-market levels got squeezed here to towards here. The red line is the 30-minute chart resistance at 15,000. And look at this nasty rejection. If you see this 100% retracement from here back down, means that there are strong sellers in the market. If you are trying to buy this market, be really careful, because right now we are at the same spot as we were just trying to consolidate in here. It resolved higher and we got ultra rejected. What does this mean? Sellers are still in the market, strong sellers that are pushing this big Nasdaq down. At the same time, we are seeing the dollar pushing higher with strong green candle. So correlation with the Nasdaq, with the dollar, correlation with yields. The 2-year yield is 1.50% in the green. The 10-year is pushing 2.75, increasing higher, pushing out of bounds of this channel. So look at this huge strength. And this basically is this difference between the 2-year and the 10-year. It's causing the inverted yield curve really continue higher. We have 1, 2, 3, 4, 5, 6, more than 1 week of push higher in order to uninvert. The uninversion will mean 0%, and that would mean that the long-term yield is way higher than the short-term, meaning that the Fed either has started cutting interest rates or the long-term prospect outlook is just way better than the short-term. Either way, the economy is sick, and I think this kind of move is showing that kind of fear, that kind of concern. At the same time, gold is continuing its move lower, sensitive of higher interest rates. So correlation here, copper, big red candle, silver, big rejection. So basically the Nasdaq was the outlier. Nasdaq was outperforming, was quite a big bull trap. But as always, on the weekly recap, I always mention that you have to really find correlations in other markets. And when Nasdaq was pushing up and at the same time we are seeing this strong trend on the dollar, I don't really trust the move higher. The Russell 2000 was also quite weak. Look at financials. That's why the S&P is so weak, and the Nasdaq was just outperforming everyone. So I didn't trust this move, and this is one way in which you can really avoid these kind of traps up here. A lot of liquidation on the way down, and I think for bulls today is just a matter of leave to trade another day. And a lot of stocks on the Nasdaq are green, but that's because of the huge gap on a lot of them. But overall, this is not a good side of these kind of things are not good when you are trying to push higher. It means that sellers are still there. Someone is manipulating and trying to trap a lot of buyers there to find liquidity. So be really careful with that. I would like to bring to your attention that crude oil and a lot of energy stocks are finding a lot of resistance. XLE, it's minus 2.29, energy sector quite in the red. And look at this, utilities XLU sector minus 5% on the day. And there's a lot of stocks that are really suffering on XLE. Net extra energy, it's minus 8%, minus 3, minus 3, minus 3, minus 3, minus 2, minus 5, a lot of red in the energy sector. So is this due to the economy that is trying to basically tell you we don't trust this economy, we don't trust the consumer spending, we don't trust these prices, so everything is pulling back? That's quite a big of a deal. The last time this happened was on March, COVID-19 crisis. So these kind of moves lower mean that something is wrong. Some sectors are feeling the selling pressure. So I think it's quite logical to really be afraid of buying big tech stocks because higher for longer is still a big fear on these markets. So be really careful because there's a lot of divergences and something is sketchy right now. And that's all from my side. As always, if you found this video useful, please give it a like, support the channel by subscribing, because I upload videos every single day for market forecasts, market updates, and market recaps. Also, weekly recaps like the one I uploaded on Saturday. Give it a check if you didn't. Those are quite detailed and quite interesting for you to really understand my approach in the markets, to review the week and prepare for the week ahead. So I hope you are having a nice trading day, a good trading day. Don't ruin your day in the first day of the week, the first day of the month, because there are a lot of tricky things in this market right now. Uncertainty, fear. Be really careful, at least on the Nasdaq tech side of things. Remember that discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.